Everybody, welcome to the morning market briefing. It's Wednesday, July 27th, 2022. Hope you're doing well. Lots to chat about today. We do have the Fed announcement coming up at 2 p.m. But we're going to start off with earnings as we previewed on Monday, a super busy week as it relates to earnings. Lots to digest, and we'll talk through some of this stuff as we go. But right now, just to kind of set the table a little bit, Dow futures up about 0.5%. S&P futures down a little bit less than 1%. NASDAQ futures up a little bit less than 1.5%. Ben, where do we want to go first? We got, I would argue the biggest companies to talk about right now would be Alphabet, Google, Microsoft, and Visa. Where do you want to jump in?
Let's start by talking about Visa, and then we'll go to Microsoft, and then we'll go to Google. So the kind of the cleanest to the dirtiest.
I like it.
So if we're talking about Visa, basically they didn't really add much at all in terms of how we're thinking about the economy. They said, and to their credit, the data supports this, that the consumer spending trends remain very strong. They said, look, people aren't using their Visa cards to buy used cars, and they're not using them to buy houses, which is where a lot of the pain has been. And so they said that things are actually going on pretty strong for them, and they don't really see signs that the consumer is weakening. I was on the call just before we got here, and they said, look, we can't tell if they're mixing down. We can't tell if they're buying smaller packages, but what we can say is that they're still spending just as much as they were. And that really hasn't changed. They're seeing more strength in the affluent consumer. Again, that's not really of a surprise because of a lot of the inflation squeezes happening at the lower end consumer. So Visa, kind of a humdrum quarter, despite all of the headlines, especially as it relates to the consumer.
Microsoft, it was not a quarter we were watching the immediate reaction to earnings. It was not a quarter that we were necessarily all that pleased with. It traded down for a while. Now it's up 3.5%. How do you feel about Microsoft's quarter and what they were able to do?
The weirdest thing is that the stock was down after it reported earnings, and I thought, the numbers weren't great, but the stock had been down a lot over the past month and even yesterday as well. And then they announced guidance, and their guidance was on the call, and it was right in line with estimates. Actually, maybe even a little bit lower, and the stock jumped 6%. And now I think it's up about 3% or something. Overall, I think that Microsoft is remaining incredibly robust. Their cloud business is remaining strong. There have been some moves from some customers to optimize spending, but they sell so much into large commercial. They've been signing contracts for Microsoft Azure, their cloud product. That's over $1 billion contract. That's an unbelievable contract. I just don't know people who are signing billion-dollar contracts, but Microsoft is. And they did say there was some weakness on the small and medium-sized business side, and especially on there was some weakness in PCs and advertising. So on advertising, they just talked about kind of broad economic weakness, but then on PCs, they're looking for mid-teens declines in Q3, which would be pretty significant on the Windows side. So this is a very bad read. If you're a bull on a lot of those PC chip makers, that's going to be a bad sign for them. I do think that this is pretty good news for Microsoft. I think they are in control of where they're going, and they use some fairly conservative assumptions, kind of just using the June trends as an expectation for the balance for the full fiscal year, which will end next June. So an interesting quarter from Microsoft. Also a space to watch. They're making a big push into advertising. So take a look at that. Microsoft is definitely moving into advertising, and they're actually going to be the platform that supports Netflix's ad-supported business.
Yeah, it should be interesting. We've actually been looking at various marketing things, and some of the stuff they've done on the LinkedIn side, for instance, is actually relatively sophisticated in terms of what you can do there. We haven't done any of it, but it's pretty interesting. It'll be the Netflix thing is certainly not something I saw coming, and that could be a potential benefit, arguably more so for Microsoft than Netflix.
Yeah, I very much agree. I think that Netflix is definitely taking a swing at it. When they could probably use Amazon or they could use Google. Obviously, there are some issues with that, but in terms of competitive, you don't want to be helping your competitor. But I do think that it's pretty interesting that they're going with Microsoft.
Alphabet up 4%. We were very worried about them, especially in light of what we heard from Snap when they presented pretty awful numbers last week, I guess it was. But search advertising held up relatively well. Travel was certainly a supportive theme for Google. And surprisingly, retail held up pretty well. Does this start to change any of your larger narratives, Ben, at all?
Not really. I was surprised by that. And they specifically cited women's apparel, a lot of strength in women's apparel on the search advertising business. On the direct response stuff, that was kind of a Snapchat result. That was YouTube ad revenue up 5% on a year-over-year basis. There was lower engagement just because of the tough comps. But also there was a pullback in advertiser spending on that. There was also a pullback on network advertisements, which is just kind of on the Google platform, not the search ads. So I thought that was demonstrated there a little bit. I thought that broadly Google was, they definitely noted the decline in advertising spend, but they attributed it more to idiosyncratic issues like inventory, supply chain, things like that, and that those things will be worked through. And they're using this time of slower revenue as an opportunity to reassess where they want to be and really refocus the company and sharpen that focus. So I think that's a good move. I think that estimates are too high for the Q3 and Q4 though. They expect to grow, the Wall Street expects them to grow 11-12%. I don't see them growing above mid-single digits.
Good stuff. We do have more earnings coming out this week. A couple other company headlines, though, worth noting. Elliott Management has taken a large stake in PayPal. They're pushing for faster cost reduction efforts. Elliott, man, they're all over the place right now. It seems like they're really inserting themselves, trying to drive things the way they want them, which in a way is probably this is the time to do it. There's companies that are having to restructure. We'll talk about Meta and Facebook in a moment, but when people are already prone to make some changes, potentially some cutbacks, the time to really lean into that is probably a time like this. So decent timing, potentially them if they want to get something done. Not necessarily saying that we endorse what they're doing, but they're trying to get in there. Meta, though, really pushing for a pretty brutal cut on the cost side. Ben, talk about the pace and kind of the frantic urgency with which they're operating.
Yeah, I think the cultural shift here is remarkable. You go from the Silicon Valley company playing ping pong and everything to Zuckerberg reining in spending, trimming perks, reshuffling the leadership team, and saying he's going to cut low-performing employees. He actually wrote a memo, said, operating with increased intensity. That was the title of the memo. And it says, if a direct report is coasting or a low performer, they are not who we need. They're failing this company. As a manager, you cannot allow someone to be net neutral or negative for Meta. And he wrote that to all of his leadership team. And that is,
how'd you like getting that email?
That's a market change. You're not supposed to have this in Silicon Valley. And I think that Zuckerberg is actually probably playing this right. If you want to enact change and cultural change at a place like this, you almost have to overreact in order to get people up and moving. Because if it happens slowly, it's just not going to happen because the culture is so entrenched. So I think he's making the right move here. The question is, how reactionary is he? Is he being proactive in anticipation of the slowdown, or is he being reactive because things are just that bad? And we'll find out. I think it's tomorrow night when they report earnings.
President Biden is talking to President Xi on Thursday. This will be their first conversation since March. In general, relations not real great between the U.S. and China. I don't think that's breaking news. U.S. Ambassador to China, Nicholas Burns, said that relations have deteriorated probably to the lowest moment since diplomatic relations resumed in 1972. Lots on the table here. I mean, we always kind of joke about conversations with President Xi in which it's kind of this vague, and we kept lines of communication open. It was a productive discussion. It was between him and I, sometimes not a lot of detail coming through. Do you think there's any chance that Biden's able to, have a productive conversation that actually yields something, whether it's lifting of tariffs in an attempt to reduce inflation or just smoothing relations?
I think in this instance, I think we're definitely in a place where keeping the line of communication open is a victory. as bad as that sounds, I think that is a victory because of what's on the table. I mean, Speaker of the House Nancy Pelosi continues to say she isn't ruling out plans for a visit to Taiwan, even though Beijing is saying they privately warned the Biden administration there might be a military response to that. And so this is really going to, I think there was some communication saying with respect to the Biden and Xi talk that they don't want some unintended conflict arising. I mean, so we're just trying to avoid disaster here. And if we can avoid the disaster, I think that's a success of this meeting.
All right. Excuse me. Economic data wise, Tom, we got the Fed meeting today. Yesterday, we got an announcement that Janet Yellen would speak about the economy tomorrow after the GDP report. She's going to speak tomorrow at 1:30. In our mind, a read through on how bad the GDP number is going to be, or she's going to have a lot of explaining to do as it relates to maybe some crafting of these numbers. What are you expecting from the Fed today? The expectations is 75 basis point hike. What changes that, if anything?
I think there's a lot of moving pieces right now. If you look at futures, there's roughly a 14% chance that we're going to see more than 75 basis points. So I think it's very unlikely, if probabilistically zero, that we get a half rate point. But I think there's, call it a 14-15% chance, 1 in 7 chance that we're going to get a 1 percentage point hike today. And I think that there's a lot of pressure on Jay Powell. I think that he's been getting absolutely beaten up by, Congress. Elizabeth Warren put out an op-ed 2 days ago, basically saying that the reason we're going into recession is 100% Jay Powell and has nothing to do with us. Basically saying he can't have an effect on inflation and that raising rates is just going to cause a recession. And he wants you to lose your job. So the question is, how does Jay Powell react to that? Does he shy away? Does he think, hey, I'm getting pressure from Congress, I'm just going to do my 75 basis points, I'm going to walk? Or does he say, these people don't know what they're talking about, I need to do what needs to be done, and get a little bit more hawkish? We saw Hungary raise rates yesterday by 1%. We saw a surprise from the ECB, doing 50 basis points instead of 25. So I have a little bit of a sinking feeling that we are going to get a 1%. And I think that's going to cause a lot more volatility than if we get the 75 basis point rate hike. We saw the big rally from Microsoft overnight. If we get 1%, I imagine that's going to put a lot of pressure on that upside, especially in, all these tech names, Google, even Visa, if we do get it. But, I think that it's probably the right thing to do. I think getting more aggressive is probably going to affect inflation more than people think. It will definitely affect the jobs market. Was it Shopify lay off 10% of their workforce yesterday afternoon, about 1,000 people, I think it was. So that's going to be the impact. But I would say base case, operate as if you're going to see 75 basis points on the rate hike, and then, prepare for the worst. Make sure that, if we do get 1%, then be ready for that, because I think it's a possibility. In terms of Janet Yellen tomorrow, I think she's going to be in full spin zone, full Jedi mind trick. It's probably going to be a pretty bad print. I think that there's indications the White House already knows the number and they know that it's bad. If they didn't have the number now, announcing it tomorrow, that'd be surprising. So the number's out there. People know what it is. GDP now, I think, is still net negative heading into it. So, that's probably a pretty good indicator that we're going to get somewhere in the, -2 to -1 or -0.5 range on GDP for this quarter. I think she's going to say everything that they said in this piece they put out earlier this week, which is that this isn't a real recession. We're changing the definition. Employment is too high. It can't be a recession if employment is high, but I think the employment is lagging. I think we're going to see unemployment tick up, and it's already unnaturally high. I think that's her role here, is just to pretend like everything is cool, try and keep it together. But I think everybody knows that this is textbook gaslighting.
Yeah. And the issue for Jay Powell is that, unfortunately, inflation is very broad-based, as much as they would like to say it's not. And inflation is continuing to go at a rapid pace. Sherwin-Williams reported earnings this morning, and I've just started searching PRICING in terms of the conference calls and the earnings releases. And they're looking at implementing another 10% price increase on September 6th. You had Mondelez report. They raised their revenue guidance from 4% to at least 8%. did warn a little bit on profit, but said, look, we're going to implement more pricing in the back half of the year. So, I mean, it's not slowing down. If anything, it's potentially getting worse.
It's
And
diversifying.
and the more we get quote unquote good economic data, the more that these companies are going to be emboldened to just push prices.
Yeah. And in that spin zone too, we saw that release yesterday where I think it was the White House said that, we're shifting away from Putin's price hike to these companies ordered too much inventory, which caused supply problems, which caused prices to go up. So it's just another step in the shell game of who's responsible for this inflation. Well, now it's, Target and Walmart ordered too much inventory.
Yeah, it'll be interesting. I'm watching the GDP now. We'll actually get from the Atlanta Fed one more prediction on second quarter GDP today. Right now, the estimate's at minus 1.6. So we'll keep an eye on that. And I don't know, they've been relatively accurate, but they have been bouncing around, still in the negative range, never higher than -1. But they have bounced around with a decent amount of volatility since the end of June. So interesting to see if they're expecting something better or worse or at 1.6, and then we'll find out the number tomorrow. But we'll wrap it up there. Lots to chat about, and we'll see you guys tomorrow morning.